Hello and a very warm welcome to Innovating India. Today we are talking to the CEO of BCT Digital, Jaya Vaidhyanathan. Thank you very much, Jaya, for joining us. We're very excited to have you here because the fact is, in the last 1 year, if there's one thing that's made news in the economy, besides the fact that the growth rates are crashing, it's the rising NPAs. And your company has devised an early warning system that can enable banks to detect these NPAs. Just tell us a little bit about that.
Thank you very much for having me on the show, Shweta. It's a pleasure to be here. NPA is a problem that's plaguing our country. And we have the system of early warning system that uses not only traditional data, which we are used to, such as core banking, loan origination, which is more a post-mortem analysis after something slips into NPA. But this is something that prevents NPAs from happening by looking at the larger gamut of a variety of information we have at our disposal today, which is a lot of the big data, a lot of what's in the news, a lot of other material, unstructured information that's available to us today. So it's the use of technology to prevent NPAs from happening, and it's not just a post-mortem analysis.
Okay, so how many banks have bought into this? You've recently launched this early warning system. What's been the response that you've gotten from banks?
We've been associated with early warning systems pretty much since RBI came up with a paper on what are the guidelines that needs to happen. Mm-hmm. So we implemented it in a number of public sector banks, private sector banks, as well as NBFCs. So I would say that we've had a track record of over 3 years of implementation for these banks. And the good news is that the business impact is enormous. Just to give you some numbers, just one case study of a bank, public sector bank that took this, they have asset size of say $50 billion. And NPAs is on an average 10%, which is $5 billion. Mm-hmm. Just by putting a system in place, it brings down NPA by a minimum of 1%, which is 500 million returned back to our economy per bank per year. So the repercussions are enormous of this particular product.
Okay, so just to help us understand, so what will happen? Like, for instance, if there is a big a big industrialist. I don't want to take any names, but what happened in the past? We had really big industrialists who had taken these enormous loans and bypassed a lot of the checks, and the banking system almost seemed like all the processes had collapsed, right? And so how do we prevent that from happening now with this early warning system?
See, a technology innovation or an intervention is something that takes power out of a gut feel or a person and puts the dependency on a system. Mm-hmm. That's pretty much what is the use of technology in common parlance. Mm-hmm. And this is no different. So the loans that were given were based on some data and some gut feel and interactions with certain branch managers that may or may not have been closer to a particular industrialist.
Sure.
So what it does is that it takes, like, for instance, you ask a question in a traditional method, is this corporate diverting funds? The answer to that cannot be answered by the traditional way in which we looked at credit and lending.
Sure.
Whereas when you look at an early warning system with a technology intervention, any technology intervention leaves with an audit log. Mm-hmm. What this means is that when you have an audit log, it naturally tells you who overrode the instructions and what were the ramifications of that intervention or overriding that. That's number one. Second is when you ask, is this corporate diverting funds? The traditional way, you had no way of doing that unless you saw a repeated pattern of crediting a particular beneficiary multiple times. Now, as soon as a beneficiary is set up, you would kind of go through a web crawl and say, was this part of a corporate where directors dump shares? Was this particular corporate in the news for the wrong reasons? Were they subjected to frequent management audits? So you have the alert set up as soon as you have the beneficiary set up. And if a person is overriding that, he has to have adequate show cause to kind of say, I'm overriding these instructions and still making a loan. which no officer would want to put him in that position. So it brings discipline, it brings transparency, and it uses those technology levers and news and information that you did not have on hand before. Okay. So it's a lot of those parameters. And India is very different in the sense that most of our NPA comes from a lack of willingness to play, whereas most of the global NPAs happen because of the inability to pay. Fair. And this is something that we're addressing quite well using this software.
That's very interesting. So tell me a little bit about tech innovations, right? You mentioned this is an innovation. Is this completely made in India, or completely designed for the Indian system, or has this been implemented elsewhere in the world and it's been retrofitted in the Indian context?
One of the reasons I did come back to India is I wanted to change in a small way, albeit, the mindset of a services sector to a product innovator. The next unicorn, the next product unicorn needs to happen from India. And this product suite was designed completely in India, developed completely in India, and it's meant to be addressed for the Indian banking system, which is the backbone of our economy. So completely made in India for India, because like I said, you can't take a global product and then kind of say it's going to make to fit for my mindset, because our challenges are quite unique. Absolutely. The way why we have NPAs is because of a backlash of a number of years as to why we had NPAs, and the second is preventing NPAs from happening in the future. Both of that, like I said in the earlier point, it comes from a combination of willingness to pay, which is much more important than the inability to pay.
Absolutely.
So I think it needs to address that factor as to why we have NPAs first, before kind of eliminating them or alleviating them to a larger extent.
As someone who's worked, across the globe, you worked with big organizations in the United States. When Accenture came into India, you were one of the key people that drove the vision for the company. I want to understand from you, how do you look at innovation in the Indian context, right? Like we've seen the big unicorns, the big disruptors right now are all originating in Western economies, whether it's the United States or any other part of the world. What is innovation in the Indian context, and what's your outlook for the kind of innovation that we could see coming out from India in terms of different sectors and different areas that needs intervention?
Right, that's a great question. I think innovation in the context of India should not be different from that of the world. That's my primary submission. Because when unicorns come, it's about coming up with a new, unique offering for the global market.
Sure.
So I think we should not see that how much can we do. Dream big and things will happen when you have the determination and the vision. I think that it is to more say that this is not, don't limit ourselves because we are here. I mean, we need to kind of create the next unicorns from India, and that's the vision. So what do we need to do that? And it's been happening in steps for us. First, technology itself and us as an exporter of technology was the first innovation that happened post when it opened up, right? Our economy opened up. Then it became a services mindset, and all of innovation was restricted to the services industry. I think we are primarily beautifully right now poised to create the next products that are highly innovative and address a particular niche. And India is one of the biggest consumers of or even importers of certain types of technology, which is something we need to get away with. What we are trying today in India is to take a lot of what the global players are doing and try to form fit it for our needs, which is not going to work because we have our own way that we address different things. We have a culture of innovation. We have, as a consumer, we have very different needs. So first things first, be Atmanirbhar, create in India for India, and then take it to the globe, which is something that's needs a flip switch, needs to be taken in, because we were always at the tail end of an innovation. When things kind of died down in the global markets, it came into some of the developing countries and then said, it is going to run its course. I think we need to flip that and become the innovator. First, address your needs through Indian products, and then take them global, because that will fulfill a whole range of needs for a different segment. I'll give an example of one of the innovations. There was a need to develop a branch, a bank in a box in India, which was to happen under $10,000, because they said this is going to be the bank for rural India. And the same product found great acceptabilities in places where there's a high density of population. Example, Hong Kong, Korea, where they needed to fit that branch into a small space. So
Sure.
there is a lot of applicability for what you created in India for a particular segment, and then look at it in terms of global adaptation.
Right.
So do not keep the global mindset when you're innovating for India, but make sure that it has the reach or the ability to kind of roll out to different markets.
So what happened with the bank in a box?
It was a super duper seller, especially with global markets, because it kind of, wherever there was a high density population, where you had colleges.
India, but did we did implement something when Aadhaar came around?
We did it in a number of rural areas. We actually went in and put that in areas where you don't have a lot of people, and it worked in certain markets such as Tirupur, for instance, which is a big export hub in Tamil Nadu, for instance.
Sure. Yes.
And they don't have access to the global bankers or the investment decision makers, though they are very cash rich.
Mm-hmm.
So how do you kind of expand what is just a bank in a box, which is not an ATM? It's much more than that. But you can call on an investment advisor and set up appointments. And then the advisor comes home to your machine. So you have pretty much the global reach that a person, high net worth individual has in Mumbai, as much as you have from a remote location, such as, the areas that I mentioned. So it worked beautifully. Yeah.
All right. My last question, what can the government do to encourage more innovation and the innovation mindset amongst entrepreneurs?
I think the innovation mindset is something that I'll address first, because that gives rise to what the government must do. Because it's across a range of things that we can do. Innovation mindset happens at the school. It happens with a kid. Most of our children are taught not to ask questions in school. We have learned from a mindset of saying it's disrespectful to ask questions. So we go with the science of saying, take things as they are given, which is kind of the antithesis of an innovation mindset.
Absolutely.
More is the theoretical approach to learning versus a practical approach to learning. You will only learn the concepts very well when you try applying it to something that you do. And that's where the innovation mindset is, to say, could I change something so that it performs differently for my unique needs? And that has to happen at the academic level. Then let's talk about the entire life cycle. You go into a college. The collaboration between industry, government, and academia is particularly weak in our country. Whereas you see that the biggest innovations in US, for instance, happen out of universities.
Absolutely.
And there's a whole lot of industry funding that goes in, and there are a lot of governmental incentives given for that.
Right.
You would see that most of the Nobel Prizes that came recently came from the colleges,
Yes.
the professors' colleges. Unless that changes and it happens out of our IITs and top engineering schools, we are not going to create the innovation mindset. We can keep talking about it, but still it's going to be people that went outside India, learned better, came back and did it for us.
Right.
It's
right.
not going to be something that's inborn.
Mm-hmm.
So I think from a governmental perspective, to encourage this collaboration and to incentivize the collaboration between industry, academia, and that of active involvement with the government through advisory panels, I think is really key. Second is obviously the easy ones, which is tax incentives, which is more impetus for any product that is created in India. And I think the most important governmental intervention needs to come from barriers to entry. As an entrepreneur, when I created products for the banking segment, we had a number of challenges. You could not go to a public sector bank unless you had references from 3 other public sector banks that have been there or done before.
Absolutely.
And that can only come from the global brands, because they've been there and done something else. It's not early warning systems. They would have implemented a risk system somewhere.
Sure.
So the impetus given to the startups that are made in India for India, there's a lot more that can be done. And I could talk about it in a complete segment all by itself.
Sure, fair enough.
These are my highlights.
Thank you very much, Jay. That was lovely. And I'm so glad that we had you on Innovating India, the show that gets you all the innovation that's happening in the country. Thank you so much. We'll, of course, look forward to catching up again with you very soon.